So in the last video, we looked at manipulation candles. What traders don't understand is once manipulation candles close, the next phase of price action is now active. Distribution towards confirmed highs or lows in the market. So some traders are either in the wrong bias, they're short when they should be long, or they have no idea where to actually set their take profit. So I want to show you exactly how to enter trades and trade towards higher time frame targets using distribution. So let's start with a quick run through of what distribution candles are and what they look like. So the definition of a candle that distributes is one that distributes towards confirmed highs or lows in the market. So this is seen through the three candle pattern of accumulation, manipulation, close inside the range. The next phase of price is distribution towards the exposed higher time frame targets. So those are the highs or the lows, depending on whether we're trading bullish or bearish, of the manipulation candle first, but most importantly, the accumulation candle. So D is the distribution phase of AMD, accumulation, manipulation, and importantly, distribution. These candles have very similar characteristics. They aggressively trade towards confirmed highs or lows, they should say, in the market. Typically, they respect lower time frame structure, and they have very fast price action. So when you see these trades that just play out perfectly, they're most likely trades that inadvertently are sitting in distribution phases because price just wants to move. It's not looking to seek liquidity lower anymore in a bullish example, just wants to go higher. One quick disclaimer is that distribution candles can still seek liquidity first. So what that means is if you're expecting fast price action in one direction, there might be still lower time frames where there needs to be some liquidation before price moves. So for example, if you're trading a 2-week distribution candle, maybe the weekly wants to still sweep before we get the move. So we'll get into this in a lot more detail, but that's a quick disclaimer. So what does this look like? So we've looked at this already. We've got accumulation, manipulation, where we see that breakout into the external range liquidity at this high. Distribution candles then take price from these highs to the opposing range liquidity at the low of the accumulation candle. So when I talk here about the targets, the manipulation accumulation candle highs and lows, in this example, this is the manipulation candle low, and this is the accumulation candle low. This is ultimately the distributing target for price, but we might see some reaction from this level as well. So something to note. What or why do D candles matter, distribution candles? So you've got accumulation, manipulation, distribution, clean targets, we have a target, fast price action, so we don't need to get too worried about further manipulation or something happening against our trade that's going to stop us before the move. Traders are being trapped, and that's why this happens so aggressively. If you're short in this down move here, you're getting short in this candle here, you're seeing this breakout, you're getting short in here. So much money, liquidity is building in this area. So when distribution happens, it happens extremely fast because it doesn't want to give anyone that's short in this range time to get out of their position. It just wants to stop them all out and sell or buy into those orders. So price legs get respected, which means that trading becomes easier, which is nice. Distribution is your confirmation. So most traders, they're unaware of the higher time frame draw that gets set when manipulation candles close. They're indecisive, they're either in the wrong move, they miss the move, or they get out of their trade too early. CRT swing traders see that manipulation confirms, they see that this has been a confirmation, and now they're waiting for distribution to kick in. So they enter and they trade towards the right target in the market, and they hit their targets, meaning more RR, higher risk to reward. So distribution is where you win your trades. It's where your trades hit their targets. So let's actually have a look at how this plays out in this exact same example we've been looking at. So we get the sweep or the breakout below the low of our accumulation candle. Price aggressively targets lower. So what we can start to do, and this is moving forward a little bit, is map the internal range liquidity or the structure within the price legs. So if you see, we have basically a swing high at this point, This is the highest point in this down move, this price leg lower. We then have the last buy before the sell, so this is our order block. And then we have fair value gaps, which I won't mark for now, but we're going to touch on this in much more detail. Then what we see is that price trades into this price leg and then shifts bearish again. So we get the confirmation of a new price leg. So we can mark a new swing point right here, and then we can also mark a new order block right here. So let's imagine that we're looking at this point here. We have sell off, retracement into price leg, sell off, bearish order block. And I can mark the entire area there just so it's very clear. So this level here is the last level of supply in the market. So this is bearish. Then what you see is price just aggressively trades up into this supply zone, this order block, and it closes inside the order block. So it's not wicking in and going lower, it's disrespecting, or it's showing signs of disrespect. In this candle close here, we also confirm that we've swept the accumulation candle. So we have our accumulation manipulation, and we have exposed a new order block, which is right here. So this now becomes the last sell before the buy. So we have two competing biases now. We have our supply zone, and we have the formation of a new bullish order block, a demand zone. So we can mark 12-hour demand. So what does price then do? Well, we're in now the distribution phase. So we've stung back into this. Actually, if I do this the other way, we have initially highs being respected, and we're trying to trade through lows. We don't close through the low, then we get a shift. So this is our first indication that price is going to now distribute. We have confirmation that we swept this high. So we're seeing now price action aligned with our higher time frame draw. So we can mark, as soon as we get a close of the manipulation candle, we can mark our higher time frame draw, which is that we're going to trade back to this point of external candle range liquidity. We're now seeing potential movements in price. So if you want to get in super early, you can take the order block, either covering the order block itself or the swing point. Then where are you setting your target? You're setting your target at the high of the accumulation candle. So this is a 3R trade right here. Then what we see is that price retraces back in, so it's trying to entice more liquidity in, thinking that this order block is going to somehow hold, but then price just wicks straight back up and then moves aggressively to trap anyone that's getting in short here. So we have that fast price action. Then what we get is the creation of another order block. So we get 12-hour order block right there, and then we can mark the zone, the last. Let me just clean this up because it's becoming a bit hard to read. I'm just going to put this here. Okay, so, and I'll just move this across. So this is now demand right here, aggressive price move, retracement, aggressive price move, new price leg created. So this is our new swing point at the low, the last sell before the buy. And then what do we have? We have a bullish fair value gap right here. So this is an inefficiency in price. You see between this candle and this candle, there's a gap, an inefficiency in price. So what does price do? It trades into the inefficiency. You can then cover this liquidation, the order block as well, and get in for a second entry towards the high, 2.32R. So if you got in early, you've got a 3R trade. You also get a second opportunity to get involved because you know that the higher time frame draw is in play. We've seen accumulation, we've seen manipulation, and the intent of this candle is to distribute towards the high. You can then maybe hold this trade to maybe a 3R, or if you really want to push it, wait for lower time frame structure shifts. But you've got two 3R trades there by just understanding what phase of price action you're in. accumulation, manipulation, distribution. We're going to talk in a lot more detail about actually executing trades, but this is a precursor. This is sort of like a warm up to how we would think about entering and setting our entries and stops to trade towards higher time frame targets. But you see, distribution is where you get structure being respected, clean entries, clean targets, and that's why distribution candles are so important for us to trade, because that's where we're going to hit our targets. I'll see you on the next video.